Okay, here we are going to discuss some practice questions related to the area of analysis of leverage. Okay, analysis of leverage. Practice question number 1. From the following selected operating data, determine the degree of operating leverage which company has the greater amount leverage. Then second question, which company has greater amount of operating leverage, and it's asking why. We have been given sales 2.5 million for company A, company B it's 3 million, fixed cost company A 750,000 rupees, B 150,000 rupees. No, it should be, I think, 1.5 million. ඔයාලගේ document වල වෙනස් කරගන්න 1.5 million. Variable expenses as a percentage of sales are 50% for A and 25% for B. Now we need to calculate what? Determine the degree of operating leverage. What is the equation which we discussed related to the operating leverage? Here, degree of operating leverage equals to, we can use the equation sales minus variable cost divided by earning before interest and taxation. Okay, so here we know the sales and we can get the fixed cost, and variable cost also we can get. So we can calculate the variable cost based on this given percentages. අපිට මේ දීලා තියෙන percentage වලට අනුව variable cost එක ගණනය කරන්න පුළුවන්. So we need to calculate earning before interest and taxation. Then yeah, we can calculate degree of operating leverage. Okay, let's calculate here. I will calculate descriptions. Company A Limited and B Limited. First, we need to calculate the earnings before interest and taxation. For that one, we need to deduct expenses from the revenue. So here, sales revenue. Company A sales revenue has been given as 2.5 million and company B 3 million. So 2.5 million and 3 million. Then we need to deduct variable cost and the fixed cost. Fixed cost we have been given 750,000 and 1.5 million. Let's take those. Company A 750,000, company B 1.5 million. Variable cost in the sense, company A 50% of sales, company B 25% of sales. Here sales 2.5, that means 50% from here, and 25% from B's revenue. Let's calculate. 25ක් කියනවා B ගේ ආදායමෙන්. ඒ කියන්නේ මිලියන 3න් 25ක්. That means 750,000. 2කින් 4ෙන් බෙදුවාම හරි. A's one, I think 1.25 million. Then answer is operating profit. Normally that is what we known as earnings before interest and taxation. Tell me the answers.
A 500.
B.
B 750,000.
750,000. Thank you. Now we can calculate the degree of operating leverage. Degree of operating leverage equals to sales minus variable cost divided by earnings before interest and taxation. So tell me the degree of operating leverages for A and B. For A, it is 2.5. Please check the answers. For B, it's 3. Then it is asking which company has the greater amount of business risk. Greater amount of business risk is having in case of B. Answer, reason for the answer is degree of operating leverage is high. Let's draw. B Limited has greater business risk as its degree of operating leverage is higher than A Limited. Okay, yes. I will tell what we did again. Here we have been given details related to the A Limited and B Limited. A sales revenue 2.5 million and B sales revenue 3 million. Fixed cost also have been given 750,000 for A and B Limited for its 1.5 million. Variable expenses has been given as a percentage of sales, 50% for A and 25% for B. We have requested to calculate the degree of operating leverage as we discussed. Degree of operating leverage can be calculated sales using this equation. Sales minus variable cost divided by earnings before interest and taxation. Here we have not been given the earnings before interest and taxation. So based on the given details, we need to calculate the operating profit. Operating profit is the earnings before interest and taxation. Here operating profit can be calculated by deducting total cost, that means fixed cost and variable cost from the sales. Okay, here fixed cost has been given, variable cost can be calculated based on this given percentages. That's what we did. By following that, we calculate the degree of operating leverage and degree of financial leverage, 2.5 for A and 3 for B. Then it's asking about the high risk firm from this, or otherwise firm which is having high operating leverage. We have identified the B is having high degree of operating leverage, so that is the one which is having high business risk. That's all. Okay, take this. Okay, let's move. Practice question number 2. Find out operating leverage from the following data. Sales 50,000, variable cost 60% of sales, then fixed cost 12,000. We are requested to calculate the operating leverage from those. We need to calculate here earning before interest and taxation. Then we have requested to calculate the financial leverage based on this given data. What is the equation? Now we know equation for degree of operating leverage already we calculated. Sales minus variable cost divided by earnings before interest and taxation. Here we discuss about the degree of operating leverage can be calculated. Degree of financial leverage, EBIT divided by EBIT minus 1. Degree of financial leverage equals to earnings before interest and taxation divided by earnings before interest and taxation minus interest. Is that the one? Here we have not given information related to the preferred stock. Preferred stock විස්තර දීලා නැහැ. Okay, take some time and try to do. First we need to calculate the I think EBIT, no? Yes, we need to calculate the EBIT. First one, let's do. මුලින්ම පළවෙනි කොටස කරමු. Operating leverage. Sales 50,000. Variable cost 60%. Fixed. Okay. Sales has been given as values from rupees 50,000 Then we need to deduct the variable cost. It's about 60%, no? 60% is the, yes, 60% from sales. That means 30,000. We can say for this make අපිට කියන්න පුළුවන් contribution කියලා එකක් කියමු. Answer is contribution. Then we can deduct the fixed cost. Fixed cost has been given as 12,000. Then
Profit before interest and tax 8,000.
8,000. Earnings before interest and tax operating profit 8,000. Now we can calculate, I think, degree of operating leverage. Degree of operating leverage equals sales minus variable cost, that means contribution, divided by earnings before interest and taxation. That means simply 20,000 divided by 8,000. Then degree of operating leverage is, yes, 2.5. 2.5. This is first part. Now second part. We need to calculate the degree of financial leverage. Here EBIT has been given. You can see EBIT has been given. This is EBIT. Then we need to identify the interest. How to calculate the interest here?
Equity 25 lakh, then the percentage is there 3.3 into 1. So debt should be 75 lakh into 12%. Is that correct?
Yes. Equity 2.5. You can identify debt to equity ratio 3 to 1. That means 1 equals to 2.5 in the sense debt equals to 2.5 into 3. That means 7.5 million. Is that? Then 7.5 into 12%. 7.5 into 12%. Tell me the answer.
900,000.
900,000. 900,000 is the interest. මොකද්ද මෙතන උනේ? equity දීලා තියෙනවා මිලියන 2.5යි කියලා. debt to equity ratio එක 3ට 1යිලු. එහෙනම් 1 කියන්නේ 2.5 නම් 3 කියන්නේ 2.5 ගුණ කිරීම 3. ඒ කියන්නේ 7.5යි. ඒ කියන්නේ ණය මිලියන 7.5යි. 112යි නම් interest rate එක මිලියන 7.5 ගුණ කිරීම 112. ඒ කියන්නේ ලක්ෂ 9යි අපේ පොලිය. Okay. Now let's calculate degree of, let's calculate degree of financial leverage equals to earning before interest and taxation divided by earning before interest and taxation minus interest. Here earning before interest and taxation අපේ earnings කීයද? How much is our earnings? 2 million. Earnings 2 million divided by 2 million minus interest. We calculated 900,000. Tell me the degree of financial leverage. 1.82. Is that?
Yes, sir.
Okay, thank you. Complete this. Practice question number 3. Royal Industries, a well-established firm in plastics, is considering the purchase of one of the 2 manufacturing companies. The financial manager of the company has developed the following information about 2 companies. Both companies' total assets of rupees 1.5 million. 1.5 million. Okay. Then you have been given information, sales, cost of goods sold, other expenditure, earnings before interest and taxation. Then cost breakup also has been given. Cost of variable cost. Cost of goods sold ඇතුලේ variable cost තියෙනවා 900,000 එහෙම. Then selling expenses ඇතුලේ එහෙමයි. Prepare the operating statement for both companies, assuming that sales increase by 20%. Sales increase by 20%. Total fixed costs are likely to remain unchanged. Variable costs are linear of sales. Sales වලට සාපේක්ෂව එක සමානවලු යනවා. Then calculate degree of operating leverage. The next one. If Royal Industries Limited wishes to buy a company which has a lower degree of business risk, which company would purchase by it? Okay, first let's calculate degree of operating leverage. Before that, we need to go for operating statement. Operating statement in if sales increase by 20%. 20% වලින් වැඩි වුණොත් එහෙම කොහොමද කරන්න කියලා. These are the given information. So what we have to do, here sales going to increase by 20%. Okay, now you can identify cost of goods sold here. From this 900,000 variable, that means balance become fixed. Balance become fixed. From here 1.8 million become variable, that means balance become fixed cost. We need to identify that. Okay, as it has mentioned, variable cost is linear to the sales revenue. We have to identify the ratio between sales and variable cost for A and B. Okay, for A it is 900 over 3,000. For B, it's 1,800 over 3,000. You can calculate the ratio. We need those ratios. That is one. Then selling and expense, selling and distribution, selling expenses. For A, variable 150. For B, that means balance become fixed. In here, B, 150 becomes variable, balance become fixed. Here also, we need to calculate the ratios between sales and selling and distribution, sales expenses, variable cost part. For A, it's 150 divided by 3,000. For B, same. B get him. මොකද්ද මං කීවේ? දැන් මේකේ 120කින් sales වැඩි වුණාම operating statement එක හදන්න කියන්නේ. එතකොට 120කින් අපිට මේක වැඩි වෙනකොට අනිත් පිරිවැය වෙනස් වෙන හැටි හොයාගන්න ඕනේ. මේකේ fixed එක. Here fixed cost is not going to change. Then fixed we can identify easily. Fixed part. Then administration, admin expenses and depreciation is going to be as same. මේ විදිහටම තියෙන්නයි යන්නේ. Cost of goods sold වලින් මේක විකුණුම් පිරිවැයෙන් 900ක් විචල්ලා ඇයිලු. එතකොට මේ 900 වෙනස් වෙනවා. balance එක එහෙමයි. selling and distribution expense වලින් 150ක් මෙතන නම් B get වෙනස් වෙන ගානේ ගන්න ඕනේ. balance එක fixed. එතකොට ඒකේ අපිට ගානේ කියනවා linearලු sales වලට. ඒ කියන්නේ sales එක්ක සමානුපාතිකවලු වෙනස් වෙන්නේ variable cost part එක. එහෙනම් මේ දීලා තියෙන දත්ත වලින් ඒ හැම එකකටම අදාළ දැනට පවත්නා ratios අපිට ගණනය කරගන්න වෙනවා. Okay, calculate those. දැනට ඒවා ගණනය කරගන්න. Calculate those, then you can identify. It's easy for you. Calculate those. Okay, hope you have calculated. Then based on that, let's move to prepare our statement, operating statement for X limited and Y limited. Sales revenue. It's going to increase by 20%. 120කින් වැඩි වෙන්න යන්නේ. Existing sales is 3 million. 3 million into 20%. 3 million into 20%. 3 million into 20%. That means 3.6. 3.6. Now we have to deduct the cost of sales when it's become cost of sales. There are one part fixed and a portion variable. Fixed part is not going to change. How much for A and B? Fixed cost. Cost of sales for fixed ප්‍රමාණය මට කියන්න A වෙලයි B වෙලයි. Tell me.
X 1350.
Sorry. X 1350.
Yes.
1350 in the sense 1.35 million.
Yeah.
Why?
Total variable cost 2.25 million. Variable cost is 900. Then
Sorry, variable cost part. Variable cost එක මං අහන්නේ. Cost of sales variable. These others, tell me the answer. 450,000. Is that? Tell me the answers.
Yeah, 1.08 million variable cost.
X. I need fixed cost. How much? Please tell fixed cost. මේ විකුණුම් පිරිවැය ඇතුලේ තියෙන fixed cost එක කියන්න. What you need to do? Just deduct 900,000 from 1250. 2250 ලක්ෂ 9ක් අයින් කරන්න. මේ 2250 1800ක් අයින් කරන්න. Please calculate and tell me. Okay, I will give 2 minutes. Do this and identify the figures. Now you can identify when it's become fixed cost. X fixed cost in case of cost of goods sold 1350. Y 450. Okay. Now what about the ratio between cost of goods sold, variable cost and sales?
%30 and 60%.
A 9 divided by 30. That means 0.3. That means from sales
3 to
30%. Then here 18 divided by 30. That means 0.6 here. Okay. Then selling and distribution 150 divided by 3000, 0.05. Here also 0.05. Now let's do. Please tell me the answers. Okay. But slide mark rakdiya. Now cost of goods sold, fixed cost we identified. Tell me the answer. This one for X.
$1,350 fixed cost.
Fixed cost for X 1,350. Now we can calculate the variable cost. Now we have calculated the ratio between variable cost and sales. Here 0.3. That means 30% of the sales is variable cost related to the cost of sales. Tell me the variable cost now. Country. How much?
So variable cost 1,080.
108.
Yeah.
Why?
Sir,
Fixed cost?
1,080.
No.
So 900 already in previous for 3,000. Oh, sorry. Okay.
Is this the one?
No, sir. So 3,000 variable cost is 900,000. No. So 900 for additional 600, it should be 16 to 3, 180, then 1,080. No, 1080.
Okay.
Am I?
30%, no? Yes. That means 3,600 into 30%, 1080. Now tell me the fixed cost related to the cost of sales in case of Y.
Fixed cost 450.
450. What about variable cost?
2,160.
2,000.
160.
Is this the one?
Yes, sir.
That is the cost of sales. Then we can deduct selling expenses. Fixed cost and variable cost. Tell me the fixed cost. මේක ගත්ත හැටි ඔයාලා හදනකම් මම කියන්නම් මේකේ අනුපාතය ගත්තා
92.
විකුණුම් සහ විචල්්‍ය පිරිවැය අතර ඒ අනුපාතයම අරක ඇඩැප්ට් කරපු එක තමයි කරන්නේ වේරියබල් කොස්ට් එක හොයන්න. මෙතන ෆික්ස් කොස්ට් එක අපි හොයාගත්ත 2250න් දැනට තියෙන විචල්්‍ය පිරිවැය 900 කියන එක දීලා ඒකෙන් විචල්්‍ය ස්ථාවර පිරිවැය ගණනය කරා ස්ථාවර පිරිවැය සමානයි. Okay, Nifras, tell me the answers for what about selling expenses? Fixed cost?
Fixed cost 90 for both.
90,000.
Yes, sir.
Variable?
180,000 for both.
180,000. Thank you. Then other costs are not going to change. We have been given those as fixed. Then we can deduct selling and administration cost and depreciation. Then here admin expenses for X 90,000, Y 150,000. Then depreciation for X 120,000, for Y 90,000. Then we can get the answers for earnings before interest and taxation. Earnings before interest and taxation. Yes. For A, I think 690,000. For B, 480,000. Here we need to calculate the degree of operating leverage. Here degree of operating leverage easily we can calculate by considering percentages here. What we need to do. Percentage change in EBIT. අපිට දැන් EBIT කලිනුත් දීලා තියෙන නිසා percentage change in EBIT can be divided by percentage change in sales. Tell me. I think percentage change in sales in both of the cases 20%, no? %20%.
Yes.
What about the percentage change in EBIT? Earlier we had for A 300,000, for B 270,000. Tell me the percentage change. Hundred and 34 A Decima. For A 130%, for B 77.8. Now tell me the degree of operating leverage. 130 divided by 20, it's 6.5. Then 77.8 divided by 20, 3.89.
89.
This is the answer. Took so time. Then if Royal Industries Limited wishes to buy the company which has lower degree of business risk, which company would be purchased by it? Then we can identify degree of operating is lower in case of B. B ge thamai adu. So we can recommend Royal Industries Limited should purchase Y Limited. Okay. Take this. Now let's move to question number 4. X Limited has an average selling price of rupees 10 per unit. Its variable costs are rupees 7 and fixed cost amount to rupees 170,000. It finances all its assets by equity funds. It pays 30% tax on its income. ABC Limited is identical to XYZ Limited except in the pattern of finance. The latter finances its assets 50% by equity and 50% by debt, the interest on which amounts to rupees 20,000. Determine degree of operating leverage, degree of financial leverage, and degree of combined leverage at rupees 700 sales for both firms. මොකක්ද කියන්නේ? XYZ ගත්තොත් එහෙම ඒකකයක විකුණුම් මිල රුපියල් 10යිලු. variable cost එක රුපියල් 7යිලු, fixed cost එක සාමාන්‍යයෙන් 1,70,000යිලු. එයාලගේ සමස්ත වශයෙන් ප්‍රාග්ධනිත කරගෙන තියෙන්නේ සාමාන්‍ය කොටස් ප්‍රාග්ධනය පාවිච්චි කරලා 135ක් බදු ගෙවනවා. ABC XYZ වගේමලු අනිත් සියලු දේ එයාලගේ ප්‍රාග්ධනිත කිරීමේ තමයි වෙනස සිද්ධ වෙන්නේ. එයාලා ප්‍රාග්ධනිත කරනකොට 50ක් ණය ප්‍රාග්ධනයට ගිහිලා තියෙනවා, 50ක් සාමාන්‍ය කොටස් වලට ගිහින් තියෙනවා. ණය ප්‍රාග්ධනයේ එයාලගේ පිරිවැය එහෙම නැත්නම් පොලිය රුපියල් 20000යි. degree of operating leverage, degree of financial leverage, degree of combined leverage calculate කරන්නලු sales ලක්ෂ 7ක් වෙනකොට. Now here we can identify that as the cost structure is identical to both of the firms, here selling price of this product is 10 rupees and variable cost 7 rupees. That means 0.7 or otherwise 70% of selling price equals to variable cost. That means in both of the cases, if sales is 700,000, from this 70% is the variable cost. That means rupees මේක ලක්ෂ 100ට 70යි විකුණුම් මිලෙන් 170ක් තියෙන්නේ විචල්්‍ය පිරිව. That means simply 490,000. Got it? Okay, now let's see. Description. XYZ and ABC. Okay. Here we can see sales revenue. We are going to calculate first the EBIT. We need EBIT. So we can see sales revenue. It's about, we have been given as 700,000. For ABC also it's 700,000. Then we can deduct the variable cost. We identified that 70% of sales. That means here 490,000. Here also 490,000. Then we can get the, and then we, in case of getting EBIT, earning before interest taxation, or otherwise operating profit, we need to deduct the fixed cost also. It has been given as 170,000. Now we can get operating profit. $40,000. දෙකේම සමානයි. Operating profit 40,000. Here we need to calculate degree of operating leverage. Degree of operating leverage equals to sales minus variable cost divided by EBIT. Then we are requested to calculate degree of financial leverage too. Degree of financial leverage equals to EBIT over EBIT minus interest. Okay. Then what we have to do? Let's calculate up to earnings after tax, as this is අපිට විස්තර තියෙන නිසා earnings after tax එක වෙනකම් හදමු නිකන් practice නේ. Then EBIT we have got. Then we need to pay the interest. Interest has been given as 20,000, but in case of XYZ we have not any debt. Here we need to pay 20,000. Then earnings before tax XYZ 40,000, ABC ABC 20,000. මේ හදන විදිය බලා ගන්න. Then we can pay taxes 35%. That means 40% into 40,000 into 35%. 14,000. $20,000 into 35%, that means into 7,000. Then we can get earnings after tax. Here 26,000. Here 13,000. Now it's asking, let's do degree of operating leverage equals to sales minus variable cost divided by EBIT. Here sales 700,000. Minus variable cost 490. EBIT 40. Then here 700 minus 490. EBIT 40. See, as both of the firm identical මේකේ capital structure එක ඇරෙන්නාම පිරිවැය ගත්තාම දෙකේම සමානයි කියලා කිව්වා. See, that implies, that indicates, that indication also have been given through the operating leverage also. Here degree of operating leverage equals in both cases 5.25. Only the change is their capital structure. එයාලගේ වෙනස තියෙන capital structure එකේ විතර. Okay, now let's calculate degree of financial leverage equals to earning before interest and taxation divided by earning before interest and taxation minus interest expenses. In here, earning before interest and taxation equals to 40 divided by 40 minus 20. In first case, පළවෙනි එකේ අපි නැහැ 4 පළවෙනි එකේ නැහැ. 40 minus 0. In here 40 minus 20. Here 1, here 2. Financial leverage. Then degree of combined leverage. Let's see that මම මෙතනම හදනවා පේන්න. DCL, degree of combined leverage equals to degree of operate leverage into degree of finance leverage. Simply we can use that. Here degree of operate leverage In case of A, operate leverage 5.25, finance leverage 1. That means degree of combined leverage 5.25. Then B, 5.25 into degree of finance leverage 2. That means combined leverage 10.5. Here alternatively, I will write here විකල්පයක් විදිහට, if you need, degree of combined leverage can be calculated sales minus variable cost divided by EBIT minus හදලා බලන්න ඔය උත්තර. Okay, then what they are asking, we calculate. Then here you can identify degree of combined leverage, no, degree of operating leverage in both of the firms equal, but degree of financial leverage in case of ABC is greater than the XYZ. Okay, as they have used the debt capital, debt වලට ගිහිල්ලා තියෙන නිසා. As a result of that, degree of combined leverage also in case of ABC is greater than XYZ. මේ දෙකේම ගත්තොත් එහෙම operating leverage එක සමානයි, financial leverage එක ABC වල වැඩි, ඒ නිසාම combined leverage එකත් ABC වල වැඩි වෙලා තියෙනවා. Okay, that's all. Take this. Okay, 2018 past paper question. The following table summarizes the percentage changes in operating income, percentage changes in revenue and beta values for 4 firms. You are required to calculate operating leverages for each of the firm, and now you know what is beta, and it is asking use the operating leverage to explain why these firms have different beta values. Different beta values තියෙන්නේ ඇයි කියලා. Okay, now let's calculate. Here you have been given changes in revenue and changes in EBIT. Easily we can calculate the operating leverage. මේකට නම් ලකුණු වැඩි. Here I think this is 2 marks. මේ දෙවෙනි කොටසට ලකුණු 2යි. 4ක් නේ. මේකටත් 4ක් වැඩි. But it has allocated in 2018 page. Okay, let's do. We are having 4 firms, and we have been given change in percentage change in revenue in the sense sales, as well as percentage change in EBIT. We have requested to calculate degree of operating leverage. Firms ABC, PQR, STU and XYZ. Change in percentage change in sales has been given as 27%, 25%, 23%, and 21%. Operate, is that? Yes. Operating leverage. %, 32%, 36%, 40%. So degree of operating leverage equals to percentage change in EBIT divided by percentage change in sales. Now let's calculate. For A, degree of operating leverage 0.93. For B, 1.28. For C, 1.57. Not for C, for STU. For XYZ, 1.96. Let's take beta values also to here. 1, 1.15, 1.3, 1.1. Now you know beta value give an indication how our firm's performance is sensitive towards market performance. That means having high beta value in the sense having high beta values in the sense it's more sensitive towards market changes. That means if more variances happening in the markets, we also have to expect more variances in our particular firm. Okay, that means simply risk is high. In here you can note that highest beta value is with XYZ 1.4. At the same time, highest degree of operating leverage also having with that particular firm. Okay, that means high levered firms are having high beta values as those are high risk. Okay, so for this is the answer for point 1. So we can write the answer for point 2. Firms with high operating leverage also have high beta values. Okay, this is the past paper question of 2018. It covers 6 marks. 6 marks. 4 marks for this table and 2 marks for this.